Joining me now, Mervin Jebaraj, the director of the Center for Business and Economic Research at the University of Arkansas Walton College of Business. Good to see you again, my friend. Happy New Year.
Happy New Year to you, and I'm glad to be back on.
All right, we got a lot to talk about because the economy is in a state of flux right now. I want you to start first with the state's economy, and I want you to tell me, give me your assessment of the state's economy. Are we in a good place, a bad place? Where we got places to grow?
Yeah, I mean, I think for most of 2024, broadly, the state economy has done well. And by that, when you look at the headline indicators, unemployment rate close to 3.3, 3.4% for our state, which is not the historic low, but very close to it. And then adding close to about 20,000 jobs in the last year. So overall indicators look pretty good. Wages were growing in Arkansas as well. But again, as has been the case in previous years, that growth is not necessarily broad-based in the state of Arkansas. So I said, 20,000 jobs added, about 12 to 13,000 of those were just in central Arkansas and northwest Arkansas, slightly more in central Arkansas than northwest Arkansas. And most of those in both places were in healthcare, in construction. In central Arkansas, there was a good growth in manufacturing. In northwest Arkansas, there was a good amount of growth in local government, so school teachers and those types of jobs. So that's where we've seen the growth in our state, and that has helped the overall headline numbers. But that also means that we haven't seen significant growth in some of our other metro areas around our state and in some of the more rural communities. So again, broad headline figures, wages are up, unemployment rate remains low, and we added close to 20,000 jobs last year, but there's still parts of our state that are left behind from that growth, some that haven't seen that growth in several years, and that hasn't changed. And then, some large sectors like manufacturing have done well or better in the last year, but then other ones like agriculture, for example, has struggled through the last year, particularly as commodity prices have been fairly low in the last year. And then the previous year, there was drought and things like that. So we've had some ongoing issues in some major sectors in our state, but also some strengths and positives going forward for some other sectors like manufacturing in our state.
Usually, when the state GDP does very well, it is because of agriculture. But as you just indicated, agriculture has struggled this past year and in a couple of previous years. Yet our state GDP was pretty solid. What do you attribute that to?
Yeah, I mean, so if you think about the kinds of things that contribute a lot to GDP, so GDP again is measuring final sales of products. It takes a lot of bushels of corn or soybeans or whatever else to make up one airplane that comes off the manufacturing line in central Arkansas, or even a few different missiles that come off the manufacturing line in Camden. So those things just have way higher dollar value, and we have invested significantly more in those activities. So when we think about conflicts going around the world in the Middle East, Ukraine, as well, and the amount of aid that the United States has provided both of these countries in both of these regions, a lot of that weapons manufacturing has happened in the United States. A lot of that has also happened here in Arkansas. So there's been significant increase in GDP that comes from the sale of those types of systems. And then broadly, we've seen growth in steel manufacturing here in Arkansas that has been exported to Canada and Mexico, which is important to keep in mind as we start discussing tariffs once again as it relates to those countries. So those sectors of the state, they may not be a ton of jobs, but they certainly contribute positively to GDP.
Let's talk about this transition. We're going from President 46 to President 47. Joe Biden has passed the torch to Donald Trump. What condition does Joe Biden leave the U.S. economy? What does Trump inherit as an economy?
Well, judging by the outcome of the election, you might think that the economy is not doing great, and that was probably the reason for the political change in DC, but that's actually not the case. The economy has done well for the past 2 years. So I'll say this is maybe not as good as the economy that Bill Clinton passed to George W. Bush in 2000, at the end of 2000 to 2001. But it is in several indicators, sometimes about as good, if not just a little bit under. So I think the unemployment rate remaining fairly low is a very good measure of that. GDP growth has been very close to 3% for the last couple of years, which is the target that the Trump administration has set out for their term as well in the upcoming years. And then the headline inflation rate has dropped to somewhere between 2.3 and 2.7%, depending on which measure you're looking at. So not at 2%, which is the long-term target that the Federal Reserve has, but very close to that. So overall, I would say with the high job growth in the United States, about 180,000 jobs each month added in our economy, the low unemployment rate, the close to 3% GDP growth. I think this is a very healthy economy to pass from one administration to another, and it allows the new administration to work from a position of strength as opposed to a position of weakness.
So let's talk about what we foresee on the horizon. President Trump has indicated, quite a few things that he wants to initiate, whether it's on the energy front with more drilling, and that's going to have some consequences, as well as tariffs that you've mentioned earlier. There are other things too in terms of tax cuts that are being discussed and debated. What do you see on the horizon, good and bad, that may shift the direction of the economy one way or the other?
So, I mean, I think let's take tax cuts for example. We don't expect that to have a significant positive or negative impact on the economy, assuming that they are renewed. So, if the tax cuts that are expiring this year are renewed, we don't expect that to change significantly anything for the economy because those were already in place. On the other hand, if they're not renewed, which is very unlikely, that would have a negative effect in the short term. But again, no major impact we expect from there. We have been seeing close to 3% growth. It is, probably above average for the United States at this point to have had 3% or close to 3% growth for the last couple of years. We would still expect to see between 2 and 2.5% growth in GDP for the United States, assuming that there are no major policy changes. So that is obviously a very big assumption to make. The challenges that we would have would be related to trade to a certain extent, and some of the immigration issues. Some of the job growth that we've seen in the United States has come from larger than average immigration to the United States. That immigration level has already dropped off significantly from where it was in the early part of 2024. So there is some possibility that the job growth will not be nearly as strong because we're not adding as many people to the workforce as we did in the previous years. Then, compared to that, we've talked about some of the manufacturing growth in the United States. We've been exporting airplanes, steel products, steel directly, and a lot of weapon systems. And any changes to any of those things would, either increase or decrease the production of those items, and those could have employment and GDP impacts going forward as well. So a lot of this is just up in the air right now. So we're very few days into the new administration, and there's a lot of major policy changes still being discussed, and we don't have the outline for that yet. But assuming nothing major changes, we would expect growth to continue here in 2025 as we saw in 24 and 23.
I may be throwing you a curveball here, but let's talk a little bit about energy, which I mentioned earlier there. President Trump wants to open up more opportunities for drilling. We're already in a pretty good place with energy, quite frankly. If you increase the supply and the demand's not there, you're going to see prices fall, which will be, lower gasoline cost, which people would not complain about. But at the same time, it, you're going to oversupply this economy with this type of energy. That has a chance to kind of diminish some of the productivity and some of the economic activity, doesn't it?
Again, we're not expecting significant increases in production here in the United States. Yes, there have been, some talk of policy changes of opening up more areas for oil and natural gas drilling. But again, we're dealing with the world market here, and even U.S. producers of oil and natural gas are pulling back production because prices haven't been as high as they would like it to be. A major, keep in mind, because Russia and Saudi Arabia pulled back production to try to support prices, the US is currently producing more energy than they are at this point, even though they have more reserves than we do. So we're currently the largest producer. That is not expected to stay that way forever because at some point Saudi Arabia and Russia will need to produce more just to be able to make money. So for in the short run, they'll try to hold back production if we increase our production. But again, I think the private market here in the United States also does not want to see dramatic increases in production because the world demand is simply not there at this point, particularly with the Chinese economy slowing down as dramatically as it has. And the Indian economy hasn't really picked up the slack where China left off.
January 31st, there is the major annual economic conference that you always host up in Northwest Arkansas. It's always a great event. I'm even making plans to be there. You'll be pleased to see me in the audience smiling at you, I'm sure. Tell people the details of that, who's coming, what to expect.
Yeah, so we've this is the 31st annual Arkansas Business Forecast Luncheon that we are hosting at the Rogers Convention Center on January 31st at 11:30 a.m. We have an international economy forecaster, Dana Peterson from the conference board, and then we have a domestic economy forecaster, Sam Cater from Freddie Mac, who will also talk about housing broadly, nationally, and here in Arkansas as well. And then I will be presenting the Arkansas state forecast and forecast of the different regions in Arkansas. So it's a great event. A lot of people come together. It's sort of a big business event where people really want to talk to each other more than they want to listen to the economists sometimes. But that's fine.
I don't know if that's the case necessarily. I do tune into what the economists have to say, but maybe it's because it's my job to listen more to what you guys are saying than what the rest of the table is saying. I will be there. I look forward to it, Mervin.
We're happy to host it every year.
All right. Thank you so much for being with us. He's Mervin Jebaraj. He is Director of the Center for Business and Economic Research at the University of Arkansas Walton College of Business. Thank you.